Mic test, mic test. is off. There we go. Welcome back. Thank you for joining me here on the week to come. I realized my microphone was off for a second. We got a couple of studio gremlins, and I'm the only guy in here running the studio. So thank you for being patient with me. Today we're going to talk about the futures, as far as what's going on in the week, what happened as far as futures opened a few hours ago. We're going to go into as far as what happens opportunity-wise, if we have any opportunities in the market to come. Also, there's a bit of a critical area on the SPY, or the S&P 500, that I want to talk about later on. What side of the market are you on? Like, it's pretty important. It doesn't matter long-term, because obviously you want everything to go up. But in the short term, you have to put your ego down, right? So we're going to talk about that. What I learned throughout the week, as well as upcoming events that could affect the market in this coming week. All right, first up. So over the weekend, nothing too big happened from last Friday to now. There was no sign of de-escalation in the U.S.-Israeli-Iran war as far as Friday till now. Israeli strikes are expanding. U.S. actions and Trump statements have happening. As far as I can tell, the market's opened green in the futures, and it's stayed green. We'll get into that in a little while. Iran responses to some of those threats and regional global fallout. Yeah, I'm not going to get too much into that. We can check on that throughout the week as they develop and affect the markets as a whole. Locally here in Hawaii, we're dealing with a pretty massive storm. The Kona low has been affecting a lot of low-lying areas, as well as a lot of sloped areas and homes near rivers. I'm seeing some reports that I posted on X already today that houses are falling into rivers on Maui. Oahu is flooded all over the place. So I want everybody to be safe. I want everybody to be at home. Turn around, don't drown. I hate that rhyme. But you don't forget it for a reason, right? Let's see here. What else happened throughout the weekend? Crypto price. Let's get into that. Here we go. I'm going to switch over to display capture here. So give me a moment. All right, here we go. So this is the SPY, the S&P 500. As we can tell, it already opened a few hours back, and it opened on a high, which was surprising with the fact that there's zero de-escalation happening. Like, the overall macro is going to be constantly affected by the war, right? Wars affect money, but even here on the minute to minute, it's on the one minute candles here. We're on a decent move, and the 24-hour market's just opened. It seems we're getting a bit of a small rally right now. I'm not too sure. So be careful. Like, as I said the other day, you got to tread lightly. We have no de-escalation, so it means we have no reason for us to be out of the woods yet. All right, let's see if we got some other prices here. Let's check in on Bitcoin. And yep, everything's covered in private. All right, Bitcoin price, we're up it here at, where are we right now? 72,000, almost 73,000. That's not bad. We're holding a pretty steady line. Let's get back here a little bit. Here. There we go. Yeah, we're not going to talk about how much I have or where it's at. But it's not in the red anymore because, I mean, there's a support area here. So it's really hard not to sort of buy a little bit more of this dip action, right? All right, so Bitcoin's doing well. Seems like the rest of the crypto market is also doing well. Let's see here. As you can see, I'm wearing my new Robinhood merch. Love it. It's so soft. I popped an unboxing video out earlier, and now that I'm wearing it, it is triple as soft. Like, soft. I encourage it. It's worth every penny. I mean, I can imagine everything is just luxury coming out of the Robinhood merch department. All right, a little bit of something going on here. Let's check on the global, see if this popped open. I don't remember if this is 24 hours or not. All right, on a global standpoint, still red. I mean, it's not surprising. There's so much oil and oil affecting distributions of everything. You got to think about it, right? Oil disrupts travel, not only for you, but travel for goods, travel for the service people who need goods to get to their businesses, right? Then you got transport from one side of the ocean to the other, right? So everything's being affected. Gas prices I'm seeing start to go up here in Hawaii. I went and put gas yesterday. It was $5.44 for regular, which is not terrible, honestly. Like, I've seen worse. All right, so that's a pretty decent size green candle here. So, I mean, there's a bit of a rally happening. I mean, there's something happening over the weekend. Maybe more stuff wasn't affecting the market, so it went over okay. So it opened up green, which is not a bad thing, but still be cautious about what's happening overall. Like, I still think this is a season to start picking up things that you want cheaper, right? Your companies aren't doing poorly. The cost of them doing business is just getting worse, but it's getting worse for everybody at the moment. And honestly, I think we'll get out of the woods soon. Soon, relatively speaking, as far as wars go. Like, wars can last years, right? And I don't think this one will last that long. But I don't know, right? So we have to keep our eyes open. This is red markets or downtrends are times for you to really figure out if you got a lot of conviction in your holdings, in your positions. Because if they're still green, congratulations. But if they're starting to turn red, then your convictions are really being tested. JP Morgan the other day put out that they're encouraging people to short stocks and long energy. I'm not here to tell you what to do. This is your stuff, your money. I'm not in your position. I don't know what your goals are. But if JP Morgan's shorting stocks and longing energy, maybe there's an opportunity to follow the money, or at least keep your eyes open on seeing if that's what they actually do, or if that sector moves, right? So energy, anything energy, whether it's wind, solar, gas, right? Liquid natural gas, all of it pertains to how people do things, right? How work gets done in the human society is right now fossil fuels based, a lot of it. Let's see. Now, I'm going to go over as far as bottoms go, because I don't know what's happening. The trend seems to be sticking, so I think we're going to be in this downtrend for a little while. But I don't think we're near a bottom at all. Like, there's opportunity for more falling. Let's see if I can get out far enough. Jeez. Yeah, forgive me. I'm not good with this. There we go. Ta-da. Okay. So there's a bit of, I drew a line down here. There's a pretty strong support and resistance right here that was established somewhere around end of November. Now, we haven't gotten there yet. We tried to get over there here. Didn't. Now, I think we're going to at least retest this down 6586 area. But if that breaks down and we start getting through here, these are the areas you start really looking for stability. So if we bounce off of this and head back up, then I'd say, yeah, it's a good time to try to find a bottom for you, for your positions, because I think this would be a decent area for everybody. But I'm going on a little bit of hope and technical analysis for dummies, right? Stopped, came down, might test it again. So we're just gonna stay looking at that. So throughout the week, we may or may not test it. Like, this is kind of a long span, so if we were to imagine a shape here, I'll draw one. Yeah, Why not? We'll go with red. Let's see. I can draw, let's say the bottoms, right? Bottom, 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 right? So we got a bit, and then we kind of broke it, tested it, came back. Let's see, we got a bit of a, yeah, that's about the top. Oh, skipping a few candles there, but this is kind of the general trajectory we're in. I know TrendSpider probably has this out there already. Whoop, right? So follow this. If it breaks through here at some point, then we have an opportunity to escape and hopefully reclaim some all-time highs. But throughout the last few months after it came out of these lows, it kind of just stayed in this boxed area. Yeah, okay, white's not bad. Right, this overall box, and then just couldn't take it anymore and broke down. And now we're seeing a downtrend. But we have to we have to keep an eye on what supports are. Right, you don't want to just buy everything as it starts to fall out of the sky. But for intra-week and swing traders and day traders, this is finally some good clarity that we're in a downtrend. Like, there's so much uncertainty going on over here in this white box that most of us had to kind of like guess, and guessing is not an investment. That's like gambling, right? You want to make sure you see a decent downtrend and you follow it. It's like, okay, like you can be a contrarian every once in a while, but you can't go against the river. Like, you can try with your little pebbles here and there, but you got to go with the river. And the river seems to be telling me that it's heading down towards this last time checked area in November. So keep your eyes open for that. Watch your portfolios, and just wait over the next coming weeks for this overall opportunity. I'm over drawing it in the air, like you can see my hand over here, right? So just be patient, hold on steady. I mean, the overall S&P 500 is down more than 3%, less than 3.5%. Don't quote me on that one. All right, so let's go over keeping your ego and your awareness up. Right now, as you can see, the downtrend is not pretty if you are long, but if you are really investing for a long position, you would want your stocks to go down. Like, I know it hurts. The color red just feels painful. And I think you can change the candle color here on Robinhood now. So Robinhood Legend, you can make the candles whatever color you want. So if you're sad, just make the down candle red and make the up candle, or make the long candle green. Make the long candle green, make the long candle red, and make the short candle green. There we go. I got it. And then at least it psychologically, you're not so PO'd by what's going on in your portfolio. But you should want it to go down. Warren Buffett has been quoted saying that multiple times, that you should want your stocks to go down so you can pick up more of it. I know everybody out there, screw it, all of you, like, you don't have enough of what you want a lot of the time, right? You want more stuff, but it just hurts when the stuff you already have goes down. Just be patient, dollar cost average, and diversify. That's still the major theme going on for the year, is diversity. We're going to see more and more redistribution out of the Mag 7 because of the overall weight. I mean, it's a huge weight of the whole S&P 500, right? So I think we're going to see some outflow, and that's leave some receivers out there for you to pick up good positions. I mean, you can't time the market, right? We try, but you got to have the time in the market, and staying invested in the overall global economy or even national economy in your countries is how you get farther for the long haul, right? It's not about trying to be rich tomorrow. You want to never be poor ever again. Like, so you got to keep your emotions in check, because that's the biggest problem a lot of us have, is like following our emotions. But this is money. I watched a video a few weeks back, or within the last week, that it sit with me a little bit, because They're talking about money, and they threw some money there on the table, and it's like, does that money care about you at all, right? No. So why are you putting so much emotional weight behind it? Like, I understand bills and you need money to pay for life. That's true. But you don't want to put more emotional weight behind it that it doesn't deserve. Like, especially with trading, like the dollars are no worth really until you withdraw it and use it for something, until it becomes an action of some sort. These are all just kind of trivial ones, zeros on a screen. And if you can take your brain out of the world and keep it there on the screen as far as numbers go, and keep your emotions settled, you tend to make better trades, less emotional selling. Like that, everybody will tell you that. No panic selling, right? If you're panic and you're about to sell, your conviction was not as high as you thought. It's like when it's down and it drops, you should buy more. Right? You should want to be like, oh, cool, finally it's at the price that it was X amount of years ago, because that's what you want to pick it up at. Okay. All right, that looks great. Let's see how we're doing. Let's see. All right, looks good. Now here, let's look into, these are the crude oil futures. As you can see, it's not a pretty chart. It is if you were long this position and shorted it up here at $119. And then it ripped back like a stinking meme coin down here to 77. And then it balanced out here at 98. So if you're seeing prices go up at the pump, here's the chart why. A lot of people are uncertain. The war still affects the amount of oil output the entire planet gets, because of so much of it comes out of that area. So keep your eyes on the pump. If you see your gas prices dip for a little bit, maybe fill up, right? These are also opportunities for you to hedge as an individual consumer. You don't have to be in the stock market to hedge your life, per se. I said it the other day, I'll say it now. You can hedge your overall gas expenditures using a prediction market. And what you can do is you can position yourself on one side, the side that will make money as it goes up. Because what it'll do is it'll go up at the same, or it'll go up with your gas prices. So you have the opportunity there to kind of even out your gas spending. It's not going to counteract it. You could, right? You could position yourself high enough in a prediction market that you could get a high enough return, right? If you wanted to play that route as well. Let's see here. All right, I'm going to take you back to this screen for a second, and I'm going to bring up something else real fast, and let's see if we can get some prices in on that. All right. Okay. Like, you don't have to have an account to be able to log in either. Right? You can check your oil prices right here. All right, cool. No, we're not going to do that right now. Oops, excuse that. All right, here we go. All right, cool. We're going to check, switch back to this screen, and you can check the oil prices. Here we go. Okay. Hi, welcome back. Okay, here we go. So as you can see here, these are the projected oil prices for tomorrow, right? And you can position yourself in a short position like this. They have longer positions as well. This is just an example. But if you're seeing a spike in your oil prices and you don't necessarily need to go anywhere, that might be an opportunity for you to take that and position yourself in a way where you can gain or counteract your loss in your oil or gas budget, right? So this is a good way to do that. You check here. Let's see what else we got. Oh, well, we're here in the prediction markets. I mean, let's check. Like, we got Oscars happening, right? This is live. So right now we got Best Actor, and it seems like Michael B. Jordan is at 55 cents to win. Congratulations, anybody in this market at the moment. Hopefully you're on the right side of your trades. Timmy Boy's getting a little bit of a couple of cracks in as far as social media goes, huh? Yeah, I mean, you're throwing a little bit more shade on an art form that's been around a lot longer than all of us, and it's still persisted. So maybe don't do that. So, as you can see, I'm a little bit more slighted towards Michael B. Jordan winning, just because Tim. Don't do that, bro. All right, what else kind of predictions we got going on here? What are some live ones since we're here? Okay. Now these are, we got sports in here as well. Sports can be closer to gambling. You got to be careful if you don't understand the team, right? Don't trade anything you don't know. I personally try to use Kalshi and prediction markets as a hedge, not a gamble. Right? If I want to gamble, I can go and do 0 day of expiration options. All right, cool. That looks great. So if you guys haven't had a prediction market or haven't tried a prediction market yet, please implore you to go and pop open one, just to check the information as far as gas prices, where they're projecting things in politics to go, right? If you're into that kind of thing, because the news will tell you one thing at one volume, and prediction markets will tell it to you at a much more neutral volume, following the money itself, right? If you got skin in the game, you tend to make you get better data out of people with skin in the game. All right, data point. Yeah, here we got sports, culture, right? Crypto, that's our realm. So you got Bitcoin prices, Ethereum prices, and then how long you want to make your trades in, right? You can hedge here as well. If you have any of these cryptocurrencies, you can position yourself in a way to almost like being able to put a put, like in options on your cryptocurrency, right? If you think about it that way, or put a call, right? These are almost like being able to put options on your cryptocurrency, which is not possible if you don't have it in a stock or ETF form. So this is a great way to do that if you want to hedge your cryptocurrency positions. Go in and check out that at one point. Here we go, climate. Now there isn't a lot of market, or the market is pretty thin here in Hawaii, but you can check the overall temperatures. You can check the weather, like storms, hurricanes. That's all covered here. Right now, these are all temperatures. Oh, here, natural disasters. All right, Colin, use your eyes. Here we go. All right, perfect. So tornadoes, tropical storms, right? And this would be more our area of expertise here in Hawaii because of the amount we get. Now, if this is not an open market. When is this? This opens in 16 days. So we know a hurricane is pretty possible, right? It's not impossible here. It happens. It's happened multiple times throughout time. So this would be a decent way to balance out the inevitable spike or gouge pricing. We've experienced it where stores all of a sudden are charging 10 times the worth for a bottle of water all of a sudden. Now, at that point in time, we didn't have these markets, but now we can sort of hedge against other people's greed, if that makes sense. You know that uncle down the road or that auntie down the road who get on mom and pop shop not going to gouge you. But sometimes the big box stores or the panic stores or the panic selling stores will gouge you on these things. And at least you can't control that because you need those goods, but at least you'll have something that was prepared to make a profit off of those events, right? These are events that you can track. And if you know your area, or tornadoes, if you have a lot of tornadoes in your area and you know that causes damage, it causes your insurance to spike, then you can use these as a way to hedge yourself against those inevitable price increases. All right. Awesome. Now let's get back here. We'll bring you back to the charts, and we'll see how that's going for a second. All right, aloha, welcome back to me. Still loving this outfit, man. I feel so luxe. Now I'm gonna be honest. I'm not good at keeping white like safe, like in any stretch of the imagination. So this is gonna be like a going out outfit, or like maybe not even eating. Like I can have vanilla ice cream, water, ice cubes, maybe some rain. But this is like an in-house outfit. But oh, it's so soft. My goodness. Good job, Robin Hood. Thank you for this. All right, let's get back to this. All right, let's move you out from there to here. Aha. Thank you for bearing with me this long. If you have any questions, please leave them in the chat. Even if you have questions and you're seeing this after the live is finished, I'm happy to get to your questions. So please put them in the comments later on as well. Okay. Here we go. Okay. Just checking. If you have any comments, please leave them in the chat. I can get to them at the moment as well. Let's see here. Okay, perfect. Keeping everything private, right? My goal here is not to share my wealth. My goal here is to share my knowledge, right? I want to help you gain a leg up in your wealth department, because you gotta know things. You gotta know things about your money. When it's safe and comfortable, you tend not to check on it a whole lot. In regards to, I'm talking about savings accounts now. Yesterday I was in the salon and a client was bringing up, I have it in a savings account. I was like, okay, cool, that's awesome. You should always save your money and prepare for a rainy day, like we're having right now. But how much are you getting? What is your APY on your savings account? Is what I asked him, and he honestly had no idea. And I was just like, how do you not know how much you're getting back in your savings account? Like, you need to know what your money's doing. Like, I'm not saying put it in a stressful place so you watch it more. I'm saying you need to know at least the basics of your savings account, right? And once you know that, then you can go and explore investing like this, where you're like, okay, is there something that gives me a little bit more than a savings account but is just as safe? Yeah, sort of. I mean, nothing is really safe as far as investment goes. Everything has a risk, but there are some low risk opportunities that can get you over 4% return on your investment every year, and that's pretty good. If you can beat your savings account and maybe beat inflation, which is going up as well. We're going to get into that in a second. The VIX is let's see what the VIX is real fast. The VIX will definitely spike at some point this week, because this is a good segue into that. There's so many. Hold on a second. Thank you. All right, so as we can see here, we got a pretty big spike on the VIX here, upwards of 35. Now, the last time we had something like that was way back. Let's zoom out a bit. Okay, let's give you a longer day frame. Here we go. So it didn't hit the most recent highs. Like, this was that April 5th, April 4th low or spike. But it's definitely the highest spike we had this year and it's highest spike we've had since then. Now, it seems like even on the VIX, there is a support area. And if you don't know what the VIX is, I covered it a couple days back. But what it is it tracks the 30-day overall option flow on the S&P 500. And that tells you whether there are more puts or more calls or the spreads. Like, it just tracks the overall volatility of the S&P 500, which is a good indicator of the overall global market. So we hit a high here for the year, and we came down a bit. But this week we've got right. Yes, we've got a Federal Reserve interest rate decision coming in this week. They have a meeting happening the 17th and 18th, so expect a little bit of violence there. We got U.S. retail sales likely coming in on the 17th. That's a gauge of consumer spending, if you don't know what that is. The U.S. PPI also is coming in, most likely sometime midweek, the 18th. That's the producer price index. It's sort of a way you measure inflation. And then you got global central bank decisions as well happening this week. So it's gonna be a volatile week, just because of the overall things coming in, the overall news coming in, the decisions being made. But back on the Fed, I checked the prediction markets. You can check them in a little. I'll check them again a little bit, but they're pricing in that they're not going to do anything. There's not going to be any change whatsoever as far as rate goes. And right now, if I remember correctly, check me later. It's about 3.8% is what that rate is. And inflation means they pump more money into the overall economy to counteract the price of things going up, right? But then bond yields go down. That's a whole deep dive that we can do down the road. Oh, additionally, China economic data also coming in this week. So as we know, and we will continue to reiterate this, expectations are everything. And at first I heard that and I didn't understand because my expectations were so small and uneducated. But now I'm a little bit farther down the road here and my expectations are more... I'd say they're sharper. They're more accurate. My expectations aren't built on hope, right? They're non-emotional expectations. Like we talked about no de-escalation happening yet. We talked about no recourse in the overall global conflict yet. So that's going to put a damper on the market. And there's still a pretty hard downtrend happening. Here we go. No, hold on. Excusez-moi. Ta-da! All right, cool. So as you can see, there's still a pretty hard, definite downtrend now. Right? If we even got more exact with this line, you can see it's broadening out a bit. I'll put this on the high. We'll kind of broaden this to even to the highest high. Right? It's still a definite downtrend. Right? So regardless of what comes in news-wise, there's no amount of individual day-to-day news that's going to save the market at the moment. Now, I'm not overall like a bear. I'm a guy who likes making money. And my money gut tells me that, hey, we're going to have to change our positions and consider following this trend. Right? Like, I'm not going to contrarian this. I don't know jack. But I see some definite trend setting in, and I'm going to position myself accurately, accordingly to these trends, right? Day to day, as a swing trader, as a intraday trader, these are the trends I'm looking for, and then this is a big critical area, as I said earlier, right? This kind of box here. Let's throw a box up. We'll make it green, because that's kind of what we're looking for as far as, right, this kind of area here. There we go. Right, so once we kind of enter this box or break through this box or this line, then you're going to end up with a much more momentum driven sell-off, right? Because after that, after that line, that support area. I mean, it was only a spike. I wouldn't even call it a support because it's like nope, and then stayed up here. Like this is a good support. Like as far as last support goes, I would say that would be about here, right? Even if you threw an average line in that support, about here, right? That's still where we're gonna head to. We'll extend this a little farther. Here. All right, so that's the overall support that we might be heading towards if we break through this test. I mean, we're going to test it again. It tried to test it. That's why it's called a test. You don't pass on the first try. And it might fail and come through here. And this is kind of where you want to look for your opportunities to pick up more of what you love and what you're passionate about. I always get this from clients and people new to this game that we call not being broke and trying to be richer than we were yesterday. They ask me where I have this much money and where do I put it? And wholeheartedly, I have no idea where you put it. That's up to you, isn't it? Like at the end of the day, there are a lot of places you can put your money to grow. You can plant trees in your yard, and those trees can grow into fruit, and that fruit can that fruit can provide sustenance for your family, and then that is now an investment. Those fruits will continue to grow, right? It's just like that in the stock market or any kind of investment, whether it's an investment property or it's an investment in equities, it's an investment for a future date, right? You're trying to position yourself in a way where you can kind of bounce back from things. So when I tell them I don't know where you should put it because I don't know your overall situation or life, I tell them, okay, find something you love and learn about it then and watch it, because you don't know what is a low and what is a high. That's the most overthought concept is and underthought. But it's an overthought concept for us traders, but it's an underthought concept for people who don't trade or who don't invest. Is buy low, sell high has a lot of variables to it. You got to know what is a low, what is a high. You have to be able to look at the chart, check, did it go below where I'm at right now? Was it higher than I was right now? Is there something that I know that could bring it back to a place where I could buy this cheaper? Right? And if you're not going to check it all the time, put in an index fund, deposit, $1 every week into that fund and never look at it again. You can do something simple as that. But if you want to try to elevate it, multiply it, a good place to do it is the global economy. And the stock market is the place to do that. Because you can sit here at home and trade on your phones or on your computer like I do. I use Robinhood. It's been good to me. The innovations for the program, I'm using Robinhood Legend on the computer, and then I used Robinhood app on my phone. They work well together. And as I grow, the overall innovations that to support me grow. The tools grow. Because I think of myself as more of a craftsman. I like storytelling and artfulness. So I tend to imagine about the companies, think about where they go, what could affect them. I imagine the variables that way, rather than deep diving into every single possible earnings report or down a hole of all of their paperwork. There's so much content creators out there who do that for all the popular stocks. If you don't necessarily have to, if you don't want to, you can tune into one of these other creators and you can learn from their research. Right? AI is a great tool as well. If you want to just take a 5-minute glance at any company, you can have AI check it for you. We all have it now. Utilize it. It's how I view it as like the new age calculator. And people hated the calculator at first. They thought it was going to put mathematicians out of business, which would be hilarious because we still use chalkboards. Mathematicians and high-level thinkers and scientists still use blackboards with a specific chalk because of the textile nature. It's an art to these people, right? So once you can turn it into a bit of an art and you can follow the flow and really study it and let it grow with you, then you start to learn more about what is a good investing strategy for you. I told him, like, you can take that 2K and put it in there and pick up one share of something that you like. 99% of the time it's going to go down right there after you buy it. And then you can watch it, right? Don't put the whole nugget at something. That's wild. If that whole nugget was $1 million, you're going to put it in one basket? Probably not. So you shouldn't start off your investment journey that way either. You should start off by trying to diversify. Diversity can be good for long-term growth. And then once you've got an established gauge of your sector or your market or what you're comfortable trading in, what your risk appetite is, then you can start adding a little bit more, learning about options trading or futures trading, which is super risky. So unless you understand the simple nature of dollar cost averaging, don't start to play with more risky investments. Prediction markets would be labeled in that options or futures risk appetite area. Now it's packaged in a way where it's inviting, but you have to package things in an inviting way. No one's going to use a terrible UI, but you have to remember that these are investments and you are not trying to double your money in an afternoon, right? Just imagine a few more zeros on that amount you're about to just blow up on a guess. And then you're probably not going to make that overly eager position. 24-hour trading has definitely affected that in a lot of ways, right? I can imagine before you would have to call somebody, have them book a trade for the next possible trading day, and wait. And with all that rigmarole, maybe you don't actually make that trade. Now you just click and trade. So you got to be able to think faster than you trade. It's super easy to press a button and buy something. You could blindly buy something. What you got to do is force yourself not to. At the last Hood Summit, one of my good friends, and like I look to him because he's been in the game a long time, he uses a notebook. And when you're eager and you're excited about a stock, he said just write it down. Just write down the price, the date, why you were eager about it, and come back to it. 9 out of 10 times, at least when I've been using it, the price has come down. Or I've completely forgotten about it to the point where it's like, oh, why did I even want that in the first place? So like if I can't even remember why I wrote it down, like I shouldn't have bought it, right? So a notebook will save you way more money than anything else. Or paper trading, right? You just kind of write it down, you think where it's going to go, you come back and be like, I was wrong. Yeah. All right, why was I wrong? Right? You have to remember to try to pivot from your bad choices, from your follies. You can't just all of a sudden keep following your bad decision and expect it to turn out, right? Everybody throws that theory of insanity out. I'm not gonna, you know what it is. I'm not gonna rehash it here. But there's a lot of opportunities coming in the market, like I said earlier. Keep your eyes open, right? Like I said here, we'll bring up the chart real fast on the futures. Let's be patient, right? That's going to be my goal for the week for myself, is not doing any trading if at all possible. I'm going to try to put more content out for you on some of the aspects of trading that I love and things that I learned that could save you some money in the long run. But yeah, let's be patient, right? We're up here still. We opened up green, but this trend is still down. The overall global economy is still in a shaky area because of the overall global oil supply shortcomings. Okay. All right, so expect volatility in the market, like I said, uh, with a lot of Fed stuff coming in, global banking things coming in. Expect more volatility in the market. China economic data, global central bank decisions, U.S. PPI, U.S. retail sales, and FOMC interest rate decision. Now, Kalshi has that at basically 1% to 99% that the Fed maintains it. Now, I'm hearing that the markets have it priced in. I don't know that. So be aware that it's going to be a volatile week just because that's how Fed week tends to go. All right. Thank you for bearing with me through all that. I really appreciate you being here on the very first The Week to Be. It's going to be a continuation of the week that was. I'm going to try to do that every Friday and Sunday unless markets are closed. Then we'll do it on a Thursday or whatever the earliest day or the end of that trading week is. And we'll cover the markets. I'll help you guys grow as far as in traders go. Put your questions and comments in here. I'll get to them later on. Even after the fact, like this is my first show, so I'm just talking to myself for a little while, but I got all the bugs out of the way. This seems like a good setup. I seem to have two of me up there. There it is. All right, I want to go over something I learned this week, which was pretty hilarious. So, where is it? It was so funny. Okay, so what I learned was that penguin in Mandarin translates to business goose. How hilarious is that? Like now I can't think of this bird. Like it is a bird. Like sometimes you forget that a penguin's a stinking bird because it does odd bird things. But business goose, I like that. That's perfect for us. Business goose, like pudgy penguin, I guess would be like a business goose. Van X got the best profile picture of like a business goose, I think, is what I imagine. Is like that's the perfect one. Intern hat, red bow tie, top notch. Right, so as we close up this very first episode, I would like to say mahalo and thank you for being with me. Okay, as always, farewell